So today we're going to talk about stock market crashes. It seems there's always headlines and predictions about the next stock market crash. You know, if you turn on the news or you jump on Twitter, there's no shortage of opinions of when we're going to experience this big, massive downturn. Your money's at risk. And there's a lot of fear out there. So when will it actually happen and how do you prepare for it? So in this video, I want to share my thoughts on what I'm thinking about the stock market right now, some of the risks out there that are very valid, and then how I'm personally preparing for the next stock market crash. Stick around, we'll go through it together. Okay, so we're gonna get started, but I do wanna say, if you watch to the end and find this video helpful, please let me know in the comments. Consider hitting that like button and subscribing. I'd really, really appreciate it. Okay, so stock market crashes. I think it's a good idea to start with the definition of what that is. And it's really something like this, kind of an abrupt sell-off, a big decline, a rapid decline in the stock market. So depending on your age and your knowledge of the stock market, when you hear stock market crash, you may think of things like the Great Depression, 1929, when the Dow lost 89% over 3 years. And you've seen these pictures in movies and documentaries and magazines, and it was a very scary time for our economy. Or maybe the dot-com bubble, where people flooded into these tech companies with the rise of the internet, trying to get rich on the next big tech name. And there was IPOs that literally were listed and went up 3 or 4 times their value in a single day. These outrageous valuations that just aren't sustainable. And they weren't sustainable. That's why $4 to $6 trillion of wealth was just erased. And then, of course, the housing market crash of 2008. Now, this was really personal for me. And I was at the age where I actually understood then what a crash means. I watched my parents who, we built this beautiful home in Florida, and all of a sudden it was now worth half of what it was worth and what their current mortgage and loan had on the balance. That's when we saw someone like Lehman Brothers go bankrupt, and a lot of these financial institutions were in jeopardy from these mortgage-backed securities and risky assets. And maybe it was this recent crash in March 2020, kind of this big sell-off that you first saw, wow, the stock market is volatile and it can really happen faster than you think. Okay, but what about today, like right now? Is there this impending stock market crash that you should be worried about? For me, I do think there's quite a few things that are concerning out in the market that I'm thinking about and reading about. And those are things like, of course, COVID. There is this concern of the new variant that has popped up. Obviously, there's something concerning there. I don't think countries and governments all over the world would be responding the way they are. Whatever side you land on with COVID and the threat it poses to your health or others, I think it's clear that it does pose a threat to the economy based on policymakers and how they're responding. And I'm filming this here the weekend after Thanksgiving in 2021, and we just saw the Dow go down about 800 to 1,000 points yesterday. And that's pretty significant, and a lot of that was caused, I believe, by this COVID news. Another factor is the supply chain crisis that we're facing. I'm sure you've seen at your local stores, there's different items that just aren't available. And then there's also these sky-high valuations. You see these companies that have no revenue going public through SPACs or through direct listings and just skyrocketing. And you start to think, man, is this company really worth as much as this other company that's been around for 50 years with tons of revenue and physical assets and millions of customers? And I think when you start to look at it that way, it can feel a bit out of touch. And of course, inflation. I mean, we've talked about the inflation in the most recent Bitcoin video, and that's another very big concern. Okay, so those are some risk factors that I see. But if you take someone like Ray Dalio, this infamous billionaire investor, he actually put out a graphic on Twitter back earlier this year. And these are the 6 things that he looks at to identify a stock market bubble. And I think some of those are definitely obvious. And I think some of the market conditions we just spoke about are concerning. Okay, so what should you do about it? And what am I doing about it? Well, there are really three ways you can approach an impending stock market crash. The first one you can do is try to time it. And you know that that's probably the worst option, right? And there was a study done by Bank of America that actually shows if you were to invest in the S&P 500 from 1930 through 2020, you'd have about an 18,000% return. But let's say you tried to time the market and you happen to miss out on the best 10 days of each of those decades. Well, now your return is simply 28%. Think of that. And that's why the phrase time in the market beats timing the market. So another option could be that you want to diversify a bit and maybe take some profits on things that have just skyrocketed. You know, if you're an index investor, then maybe that's not the case. But if you have investments in things that have just really appreciated, it might be time to consider taking in and locking in some of those gains. And the third option, which is the option that I'm taking, is I'm doing really nothing. I plan to hold these investments of mine for decades. I plan to hold these investments through probably multiple crashes. And what I know is if I don't sell, I'm not losing any money at all. I'm simply keeping those assets through the ups and downs of the market. That may not be the advice you want to hear. And so I do want to share one other thing that I constantly do that might be a little different. I know that I'm buying stocks every single week. And I do this because my wife and I both have our 401ks set up to auto invest. So every single week we are purchasing some of the market. I also have cash on the side where I'm waiting for big pullbacks when things are essentially on sale. Now, a lot of people say, well, Josh, that's you timing the market. Or it goes back to the point I made earlier about missing those top 10 best days. But the big difference is I view this money more as an emergency fund and not so much a pool of cash waiting to be deployed. If that was the case, I would just put it into the market now. I like this money accessible, but I'm willing to decrease that emergency fund if there's a great opportunity in the stock market. So think about it this way. Let's say you have a 3 to 6 month emergency fund. Maybe you, in your mind, can think of it as a 3-month fund with the other 3 months ready to be deployed if there is a big pullback. Preferably, you'd like to have 6 months of runway, but you're willing to go down if there's a great buying opportunity. And that's what I'm doing. So yesterday, when the stock market dropped dramatically, I went ahead and took some of that capital and I deployed it and bought things at a discounted price. And my last piece of advice would be don't get caught up in the fear. A lot of these media companies and talk show hosts and financial gurus on Twitter, they literally make their living from speculation and fear. There's going to be times where you sell something based on one of these predictions and it's simply wrong. You're going to miss out on a lot of money. And so don't do that. Think for yourself, make your own decisions. But I would say it's worth looking at the options and going with what you feel is most comfortable. All right, so that's it. Hey, and if this was helpful, I hope to see you back next week when we have a new video right here. I'll talk to you then.